utility tokens don't have real value, especially in an environment that the regulators want to prevent utility tokens from being used as securities.
What if you're a 4.5 out of 5 though?
Then good for you, I guess.
So
yeah, I saw that recently. The exchanges all banded together and they gave EOS a 3.5.
EOS got a 3.75. Very important 0.25 distinction.
Yeah, EOS got a 3.75 and Polymath got a 4.5.
Yeah.
And the next day, the SEC came out and fined EOS $30 million for being a security. So, like, obviously, the ranking doesn't make that much sense.
The interesting thing about the EOS settlement with the SEC is that the SEC only stated that the original ERC20 token of EOS was a security, but the current token used on the EOS blockchain is not a security because it is sufficiently decentralized in that same.
They didn't quite make that statement, though. They just didn't really comment on whether the protocol, the EOS native token, was a security. But everybody went and started assuming, what they must mean.
I gotta go read it again.
They just chose to not make a judgment on that, but they did make the judgment on the ERC20.
Yeah.
And then everybody kind of half the people I saw were saying, this must mean that the EOS native token is not a security.
Right.
And the other folks were saying, they just didn't say it. And most people, regardless, think it's good.
Yeah.
They think it means that it's not a security.
Well, that means alt season coming soon.
Could be.
But that was the craziest thing is that it's like, okay, go raise $4 billion. And if you make a mistake, you just give us $24 million.
Yeah. I saw someone say how they spent more money on voice.com. They spent $40 million on voice.com, and then they spent 30 on the SEC fine. You got to look at how much they actually raised from U.S. investors, because the SEC regulates for U.S. people, and maybe they didn't.
Yeah.
I'm sure they raised a lot from U.S. people, but maybe there wasn't as much of the $4 billion raised from U.S. people.
Yeah.
But to me, I was looking at that fine thinking it was huge. The previous fines were much less than that. It was $200,000, $250,000.
Yeah.
And some of them have to do rescission, like Paragon and AirFox. They have to do rescission, which means they have to give the money back for the investors who got harmed.
Yeah.
But they can keep operating. So the SEC didn't throw anybody in jail and shut it down. They just said, this was a security. You're getting fined for having an unregistered security offering. You have to make investors whole who lost money, and then you can continue operating. But your company is a security. It's not, you can't have a decentralized token or whatever. So that kind of stifled all the innovation in the way that people wanted to have utility tokens be used on these decentralized networks, because now in the US, you can't really do it because you have to be regulated as a security, or you have to be a money broker through regulations by the CFTC and FINRA. All these regulators are all kind of circling the drain. Now all these creators of all these networks are afraid to launch their projects and stuff. So a lot of them are just not launching because they're just not sure how it's going to shake out, even still 2 years later.
It's going to be really interesting in, let's call it 10 to 20 years, if that thesis originally about fat protocols and utility tokens and whatever, if it proves to be correct. And what I mean by that is, everybody always uses the example of pets.com, right? So pets.com launched at the dawn of the internet. They're like, hey, come buy your pet stuff on the internet. It'll be great. And just nobody really did. And pets.com failed.
Yeah, that was one of the .com companies that everybody likes to talk about, was how ridiculous were these companies like pets.com and Webvan and all these companies that went bust in the .com bubble.
And now all of those same business models work perfectly on the internet.
20 years later.
Yeah, and so it was just too early. So maybe...
Yeah, it was PetSmart got acquired for $2 billion recently. PetSmart is exactly pets.com. It's just 20 years later.
Yeah. And Webvan is Postmates or Amazon groceries or...
Yeah, Uber would have failed in the .com bubble.
Yeah, and so, all of these utility token things have failed. Not all of them have failed, but I mean, the thesis of this is the way that things will be done going forward without a doubt, I think that has been proved somewhat incorrect, but we don't know what innovations will happen between now and the next 10 to 20 years that might enable that to become true. For the Uber example, Uber couldn't exist really until you had widespread cell phones that had data on demand with really good GPS. And so, of course, you couldn't do that in 1999, but of course it makes perfect sense in 2018. And we don't know yet if there needs to be some new thing that gets created, like the cell phone for blockchain or whatever. I don't know what it is. Or GPS for blockchains, or for the web browser, or for your Web3 wallet, or for your Bitcoin something. I don't know. And if something like that gets created and then it enables some new things that look pretty much exactly like utility tokens and those end up working out, will the people who said it failed admit they were wrong?
Probably not. I don't think Nouriel Roubini ever admitted he was wrong about the fax machine not being more impactful. Or the internet.
Krugman.
Oh, yeah, Krugman.
Yeah.
Paul Krugman, yeah.
That's the
internet
craziest
will
thing.
never be as impactful as what was it, the quote?
He said, by 2005 or so, it will become clear that the internet's impact on the economy will be no greater than the fax machine.
That's it.
And it's so crazy that he fucked that up so badly, and he's doing the exact same thing again with crypto.
Yeah.
It's like, dude, like, you clearly got new technology wrong.
Yeah.
Everybody makes fun of you, and now you're just doing the same thing again. I'm guessing he's thinking like, oh, I was only wrong about it before because of X.
You know what?
This time it's different.
He's probably using the same strategy you used when you said Ethereum will hit 2,000 before Bitcoin hits 8,000.
Yeah, he's just saying stuff.
He just
now
wants
he's getting
engagement.
The clout. He's getting the
He
clout.
wants followers.
Yeah. Krugman's playing us.
Krugman and Roubini, like, they're all just getting engagement. They're just creating drama on Twitter so they can get engagement and followers and likes and all that stuff.
That's true,
And that gets some
actually.
speaking gigs.
Shit, bro. Krugman and Roubini got it figured out.
Yeah, they're probably actually stacking sats in the background.
Yeah. I couldn't imagine being around that much Bitcoin stuff and not buying some Bitcoin. To me, at least, what I've seen is the more that somebody understands Bitcoin, the more Bitcoin they want.
Yeah.
Like, you never really see somebody who completely, well, maybe except for like Eamon Gunser. You know Eamon?
The Cornell professor?
Yeah.
Professor Doom?
Yeah. Yeah.
He's always tweeting FUD about Bitcoin.
Yeah. I think he understands Bitcoin pretty well. He's like a systems guy, cryptography guy.
He created Block X Route.
Yeah.
It's a layer 0 for blockchains.
And so I'm like, other than that, there's really not that many people where they actually learn about Bitcoin and say, oh, no, it's stupid. It seems to be kind of like the higher IQ you are and more understanding of technology, the more you like Bitcoin. At least that's what I've seen. Unless you are more driven by greed and then you maybe want to build your own thing.
Yeah, but even those people actually, I think they hold Bitcoin. Like, I'm friends with some VCs, and like, I heard that anecdotally, most of the VCs that are back in these Ethereum startups and stuff, they're holding Bitcoin because they know that Bitcoin is not a startup or a project or whatever. It's potentially money, which is the biggest use case of all. It's like people say, like, what's the killer app for blockchain? Like, duh, money is the killer app for blockchain.
Except potentially financial securities.
Financial securities could be, but that's in a different way because there's many different things. There's security tokens, there's equity tokens or whatever, which are kind of security tokens. There's Bitcoin, which is money. And then there's like utility tokens, which is like most of the ICOs. This is like app money. You got a token for your specific app, and that needs a coin. Well, that happened thousands of times in 2017, right? And I think going back to that, to wrap that thread up, I feel like a lot of us were skeptical of that even during the bubble, but we were aware that it was a bubble, so we were just kind of, knew that it was like the market was being driven by FOMOnomics, not fundamentals. So it was just pure FOMO, and like it was a bubble. It was bubble behavior, just like the dot-com bubble and other bubbles where greed takes over and that suspends your fundamental thinking. And like the tokenize the world mantra was just taking over, and yeah, everybody had these really interesting concepts for these networks that had their own tokens. And if the regulators weren't stifling all the innovation and there to like fine everybody and threaten to put people in jail and regulate the heck out of all these companies, I'm sure some of them would have been successful. But just looking at like, I think it's Gresham's law, that good money drives out bad. Is that what Gresham's law is?
Yeah,
I think
something
so.
like that.
I don't think that you need 1,000 monies.
I agree.
And altcoins are 1,000 monies, and Bitcoin is the one true money. And if people are going to be using money on the internet, and the internet is going to have a native currency, it's not going to be 1,000 native currencies. It's not going to be like the internet where there's tons of different protocols and your browser interacts you with all these different protocols, but you don't see it.
Are you sure though?
Well, I'm pretty sure. Like there's Exodus wallet and there's some wallets like Jax and Shapeshift and stuff where you can just have it full of tokens and then you can spend and it just takes from the different tokens and stuff. But then Shapeshift starts to get regulated, and all these KYC rules start to get implemented. And like the regulators are stifling all these innovators that are trying to sort of like work in this new magical money era, but they're not decentralized enough. So they can't fight the regulators, and they have to just bow down to make sure they don't go to jail and lose all their money and have their lives ruined. So it might have been a good idea. There's a part of it that's also a bad idea because there's too much money. There's just too many monies. And that the market is going to drive out all the bad monies, and people are naturally going to want to just use like one or two monies.
So what would you say if I told you Gresham's law is that bad money drives out good?
That's what somebody said to me.
That's what it is.
But I was like, no, it's good money drives out bad. It can't be bad money drives out good.
And that's what like you would logically think. But like, do you want to spend your Bitcoin?
I'm of the camp where I will spend my Bitcoin.
So I don't really, but really all I have is Bitcoin and other crypto. So I kind of have to. I get paid in Canadian dollars.
Mm-hmm.
And then pretty much everything that I don't spend on rent and food and whatever goes into Bitcoin.
Yeah.
So I keep using the bad money.
The fiat.
I want to hoard the good money for myself.
Use that dirty fiat.
Yeah.
But isn't that good money drives out bad, though? Because you're saving your good money.
Yeah, you're saving it.
And you're getting rid of the bad money.
Yeah, but the bad money is what keeps being used in the circular economy because that's what people want to use to transact with each other.
So does it mean that it drives out good?
In terms of usage.
Oh, in terms of usage.
Yeah.
Okay.
And then that's why like Bitcoin might just become this digital gold thing. Because it's so fucking good that nobody ever wants to give it to anybody else.
So in terms of like a Keynesian economic sort of cycle where it's talking about money stimulating the economic growth, the bad money is going to be used for that because people want to get rid of it and hold on to the good money.
Yeah.
But that means the value accrual happens in the good money.
Correct. Provided that people still see that it will continue to have value.
Yeah, it has to have store value properties.
Yeah, correct.
But that's why I think that altcoins and ICOs, for the most part, the market has proven the thesis that those are the bad money and Bitcoin is the good money.
Yeah,
Everything went down so much except Bitcoin went down too, but not nearly as much as...
Only 80%.
Yeah, only 80%. But it's back now. It's only down 50% now. Some of these altcoins, man, they're down like 99%.
Yeah, it's a rough go out there in the world.
I think that's the market proving that thesis that these were bad monies in the first place and they were bad ideas.
I don't think so, actually. I think it is the market proving that some of these things might not be ready.